Hello and welcome traders. We will be reviewing the third week of August. So it's from 19 to 23 of August. On Monday we didn't have any red folder news, not on Tuesday also, and not on Wednesday. So we only have Thursday and Friday. And if you are new on the channel, I want to remind you that I only trade red folders day and a specific red folders actually. I have a restriction like NFP, CPI, PPI. I just don't trade them because I know that the price action won't be clear, and the market maker will absolutely won't leave any footprints behind it, and it may do and seek and destroy a day profile. So I just don't engage with these days. So now we have Thursday. It was a quite good sell actually. So we did have a liquidity level. We took the Wednesday highs, and if we go to the higher time frame, you will see the damage. You will see the damage in the wicks. The wicks do the damage, and the bodies tells the story. ICT said that. The quote is by Michael, not me. So yep, that's how the 1 hour looks. That's how the 15-minute looks. And in the 5-minute, if you look closely, you have what? 1, 2, 3. 2022 mentorship, the 3 driven high pattern. So we have 3 driven highs. We have a clear run on stops, and we have a clear market structure shift. Let's clear that liquidity. That's your market structure shift on the 5 and on the 3-minute. I'm not interested in any 15-minute market shift. And all the high time frames. I only look for market structure shifts in the 5 and the 3 minutes. So, and yeah, by the way, I only trade after the news, after the release of, like, after 5 minutes also. So let's go to the 5-minute actually. So that was the candle of the news release. Okay. Yeah, by the way, sorry. Let me change that to New York. 9:45. Okay, AM. So you wait for the candle to close. Just wait. Don't trade the candle. Please. Don't trade the news. Never ever ever. You will be gambling. And you are not here for gambling, of course. You are here to trade, not to gamble. If you want to gamble, go to the casino. And I generally advise you not to go to the casino. It's haram. Haram. So so that was our market structure shift. That was our run stops. And that's your entry. You could either enter here at the close of the 955 candle, or at the 950. It's okay because you already have the market shift, and if we can calculate the stop on the high, yep, that's your stop at the 0.5 of the wick. It's a good clear wick. If price wants to go up higher, trust me, it will reach the 0.5 of the candle. It will retrace a little bit, and then it will go up. So we just don't want the price to come here again. That's your stop. That's your first TP. Okay. Your second, you have a trend line liquidity here. That's your second. and that's your setup if you want. That's just perfect, to be honest. Okay, and you could also anticipate the price to go for a little premium, okay, and then take the trade. Told you, you have two entries, the 945 candle and the 955. So that was for Thursday, and yeah, you could be a seller right here, right here. But for me, I don't trade the afternoon, to be honest. Like right here, I don't trade the afternoon, to be honest. So you could be you could be a seller here, here, and here. Three entries for the day. Okay, three entries. And that's your draw on liquidity. The maximum, the maximum one. The relative equal lows right here. That's your liquidity target. If you want to swing the trade, okay. But for me, I'm a scalper. I generally don't have the patience to take swing trades. Intraday, take the trade, and then go out. I go for the next trade folder. That's my style. That's how I feel comfortable trading the Nasdaq. That's for me. Of course, everyone has a style. Everyone has his comfortable in a excuse me, in a specific pattern, in a specific trading style, in a specific criteria, in a specific rules to follow. So that's my style. I scalp intraday. So that was for our Thursday, and let's go to Friday. Now we want to move to the hard time frame. On that day, we did have Jackson Hole symposium, and we did have Powell. Uh, most of the feature Powell, I just don't trade these days, and I didn't take any trades in that day. And I will tell you why in a few moments. So if we did go to the daily, I would have actually many smooth levels. This one, like this order block, and if you go to the NQU2024 chart, you will see the volume imbalance right here, which ICT has taught in this mentorship. So yep, we did have many PD arrays for that fall right here at that week. And in the 4 hour, let's mark this right now, we have a breaker. Okay, this could be much better. We did have a breaker at the, and we touched the bodies. Okay, and if we did go to the 1 hour, you will see a type of resistance type trades. Okay, an order flow of order blocks and breakup blocks. Okay, we did have that specific fair value gap, and in that day, I wanted to see price actually gravitate to these specific levels, because it's just too clean, just too clean from that order flow from Thursday to Friday. Price really wanted to go higher, and it might reach these highs in the next week, or maybe in the week after. So we will just see, because this is now become liquidity. Why? It's close to a fair value gap, and at the smaller time frames, it is an relative equal highs. So that's how you track the market maker. That's how you track the footprints that the market maker gives you, that the price action and the algorithm do and show you. You just have to open your eye. That's it. You you have to put the work, you have to be patient, you have to put time and effort into this criteria and price action. So if we did go down to the 5 minute, that was the release of the news at 10 a.m. Okay, so and clearly the price was bullish from the start of the day, and you will clearly see the run on stops on the lows. Look here at London. Okay, see how many run stops have been taken. One, two, and at the NY kill zone, two at the NY kill zone, and two run stops at New York. Okay, so how would you go for sales? You just don't. Just wait for the news release. You wait. If you see weakness and rejections to the upside through specific PD arrays and run on stops, here you will have your initial sell. So let's break down this trade now, because it really was sells, not the buys, who control the market. Okay, this is weakness. Price after taking that specific high at 10:09, it dropped down immediately. It just took 1, 2, 3 candles, literally. Okay, price then took the other high, run stops, and now you have what? You have a breaker. Now you look for sells. That's your higher time frame PD array. Okay, and it is high probability. You know why? Because at this order of flow, what happened first? Okay, look, a liquidity was taken here. Okay, then what? A break of structure happened. This is how order blocks can be a high probability for trade. If your strategy is trading order blocks and breaker blocks and mitigation blocks, that's what you want to see. A liquidity taken first, an immediate drop down, then a break of structure or a market structure shift. Call it what you want. Okay, and after that you want to see the price slowly building liquidity. Okay, slowly building liquidity, reaching up to the order blocks and the fair value gaps. And what makes it even better, if the breaker blocks and the order blocks are paired with a fair value gap. That's what makes it better. If you trade order blocks, dude, just don't trade it without the fair value gap. Okay, that was makes high probability. Okay, so let's get back to the trade actually at the 3 minute, not the 5. So because we didn't have any context at the 5 minute actually to be a seller. So that was our market structure shift. Now I'm gonna ask a question. If you really wanted to be a seller, you would have actually two options. You either wait for the complete market structure shift at the wick or at the bodies. And in that situation, just look at the stop, over 1,000 points. So why would that be your stop? Even though your TP is a 0.5R, that's absolutely bullshit. So no, that's not your entry, that's not your stop loss. And just look at the wicks. Do you see the damage? Do you see the initial liquidity? That's how you know it's going to break. if you have a context and a framework, and what was our context and framework at that moment, at that specific silver bullet open window, okay, 10 a.m., 10 to 11, that's your silver bullet. The run on stops, the PD array, immediate drop down. I fair value gap, you did have an I fair value gap, and that can be counted as a market structure shift actually sometimes, and not that down, not that down. Sometimes in a reversal days where you can see the price has taken a lot of run stops at London and at the NYK zone. Uh, if you if the price gave you footprints and you saw the context of the price action going down to the opposite direction for a reversal, sometimes the I fair value gaps will behave as a market structure shift. Okay, will behave that way, but you must have context. Our context was the PD array and the run on stops. I don't think that if we didn't have the run on stops, that the I don't think that the trade would pan out actually. That's what that's what made the the setup a high probability one. So you could be a seller here, and your stop would be at the 0.5 of the initial high, that candle 1027, and you would reach for that liquidity, the first one, the market shift liquidity 1 to 1.18, this relative equal lows, and those relative equal lows, those are your TPs. Okay, always take partial. Okay, yep, the price did continue down to take the London lows, relative equal lows also. Yep, if you are a swinger and an intraday swing trader, you could aim for that. Okay, yep, and that was for the third week of August. Hope to see you the next week. Be safe.